Welcome to A Field of Perspectives, where ideas take root and conversations grow. I'm Brittany, your host. Each week, we step into new terrain, exploring fresh viewpoints, challenging assumptions, and learning from every walk of life. From personal stories to powerful insights, this is a space where every voice matters. Join us in A Field of Perspectives. Subscribe now and let's grow together. Good evening, everyone. Happy Thursday. I hope everyone is doing well. Welcome back to A Field of Perspectives, where stories deepen our understanding and every conversation plants a seed. Today, we're diving into a topic that touches the core of the American dream, home ownership. But behind the keys and welcome mats lies a journey few fully understand, one paved with terms, timelines, and trust. In this episode, we sit down with mortgage expert Stanley Wade, whose mission is to demystify the process and empower individuals to move confidently from dreams to deeds. Whether you're buying your first home, refinancing, or just curious about what it all means, Stanley breaks it down in a way that both grounded and inspiring. Excuse me. Let's open the door to the possibility and get clear on what it takes to make that house a home. A little bit about Stanley. Stanley Wade brings nearly 30 years of mortgage industry experience, including 15 as a business owner, to his role at North Point Bank. While he can't control mortgage rates, Stanley prides himself on delivering unmatched customer service, guiding clients seamlessly through the lending process. Whether you're buying your first home, a vacation retreat, or investment property, Stanley pairs deep expertise with a personal touch. Outside of work, he enjoys concerts, traveling, and time with his granddaughter. Let's bring on Stanley. Hi, Stanley. How you doing?
Fantastic, Brittany. Think that was a great introduction. I didn't know who you were talking about, but I said I'm going to join in, right?
Well,
Thank
love
you.
it, love it. It is such an honor to have you. Listen. I
Thank you.
hear so many great things about you, and so many people that rave about your customer service and your
Thank you.
helpfulness in the
Thank you.
process. Let's get into it. I mean, it's
Let,
it's
let, yeah,
it's a
yes.
lot.
Yeah, it's a lot. It's a lot, and it's a process. And so, yeah, absolutely. I look forward to it. So, yeah,
Yes. So can you tell us a little bit about your journey into the mortgage
yes,
industry?
yes. Um, I am 18 years old, college student, and I happen to see that one of the curriculums was commercial real estate finance. Knew nothing about it, but I said, "Hey, listen, I think they're making money doing this, and so I think I want to do it, right?" And so I will back up and say that one of the things that I had as a gift was the I enjoyed numbers and talking to people, right? So I had family and friends say that I never met a stranger, and so as a result of it, I had those two things that I just loved talking to people, and I had a propensity for numbers, and so
Mm.
my journey started me as a teller, as a college student, and as a teller, and kind of did that for a few years. And I want to say, uh, I am about 25, 26 years old. I am the assistant manager at a credit union in the mortgage department, right? So finished school, working there, and a guy comes in and says, "Hey, African American guy." He comes in about my age. He comes in nice suit, the whole 9 yards, and he says, "Hey, do you have any loans you can't help customers with?" I'm like, "Man, I got a drawer full of those, right?" So he says, can you give it to me?" I'm like, "Sure." So he said, "I'm going to call him." So I says, "What do you do?" And he says, "I'm a mortgage broker." I was like, "What is a mortgage broker?" Right? And so he says, "Man, I broker loans to banks and I help people get loans." And I said, "So how are you paid?" Right? He said, "I'm paid a commission." So I'm like, I knew what that meant, right? And so I was like, "So how does one become a mortgage broker?" Right? He said, "You need a license. You got to go get a real estate license to become a mortgage broker." I was like, and in California is where I came from. A real
Oh,
estate license can also act as a mortgage license as well. So anyway,
okay.
long and short of it is, I kid you not, Brittany, probably the next day I
Mhm.
signed up for a class to get my license. When he told me how much money you can make, I said, "Oh no, man, I'm doing it." Yeah, it was probably a year later I quit that job, right?
Wow.
And I will tell you, Brittany, I have been 100% commissioned person for probably 30 years. And that is
Wow.
not for everybody, right? There are
No.
folks, I have some dear friends of mine that they say that I wish I could be an entrepreneur like you and do it that way. And then I say, hey man, listen, sometimes I wish I had a job like yours that I've been on for 30 years, you know, and I could retire, right? So
Right.
I happen to enjoy this aspect of it. I enjoy the freedom. At the same time, people say you can make this and you don't have a limit. Is what you can do. Yeah, I think I like that idea. So
Yeah.
it can be depending on how you do it. It can be feast or famine, but I happen to love what I do. As a result of it, the mortgage business fits me and suits me in that regard. So yeah, but that's
That
my
is
journey.
great.
And I want to say a few years later, I opened my own mortgage company, and I'll share this really quick. I never forget it. When I opened my mortgage company, I initially was working from my den at home. I told my three kids at the time, I says, here's the deal. If you give me the den from 6 p.m. to 11 p.m. and do your homework in your bedroom, I says, I'll take you to Disneyland or something like this.
Ooh.
Uh, because I needed to work in the evenings, right? So anyway, long and short of it is a year later, I was able to get some office space, and I'll never get it. When I got ready to get the office space, the guy says, hey, based on this is the landlord, based on your credit and based on the income that you made the year before, you're not going to make it. That's what he says to me. He says, you're not going to make it. I says, all right, we'll see. And
Right.
so I ended up paying out larger security deposit. I did that. And 18 months later, he decided to tear the building down to build a new building. And he came to me, the owner, he says, you have by far become my best tenant. And I'd like to offer you one of the places I'm going to be building in that regard. So anyway,
Wow.
we made it work in that regard. And I had some wonderful times running my own mortgage company. I was a small shop. When I say that, I mean I had about 10 people working for me, 8 loan officers, support staff. But I did that for like 15 years, really enjoyed it. I moved my mortgage company from Los Angeles to Charlotte, North Carolina in 2005. And I
Wow.
tell everybody that Brittany, I was doing fine, minding my own business. In 2008, up jumped the devil, right? The
Oh,
housing crisis happened. And as a result, the mortgage industry went into a tailspin, and independent mortgage brokers uh, were unfortunately, and it bears itself out today, were targeted wrong
yeah.
in that they thought a lot of that transpired was brokers. And everybody says we can only sell what the bank give us a sale. So it
Yeah.
wasn't us. And so anyway, but that came out late. But you needed a fall guy, and it
Yeah,
just
of course.
became incredibly challenging for mortgage brokers to hang in there. I was one of those folks, and I hung on until about 2011, and could not manage it anymore. Business had really become scarce and challenging. So as a result, uh, gave up my mortgage company and went back into corporate America. Had not been back in 15 years. And I went back to Wells Fargo, worked for them about 18 months, and it was a good entry point back in. I'm grateful for the opportunity and the experience that it gave me. Worked for them about 18 months. Then PNC Bank came into the marketplace, hired me as a manager, loan officer for them. I did that for about 4.5 years. And then North Point Bank came along, and I did 10 months of the stint with a small place. Then I actually have been in North Point Bank for 9 years now.
Wow.
People said that I am considered a dinosaur because in the sales industry, people hop around. The
Yes.
fact that I've been here 9 years is that they're like, wow, you must really like this place. I do. And it is. It reminds me of Wade Financial Services, my own company that I had, because I
Yeah.
had the autonomy, I had the ability to offer products and services, and more importantly, the support.
Oh,
And
yeah.
by the way, North Point Bank is 25 years old and just went public 2 weeks ago, and so I'm really proud of what they've done to become a. It was the largest IPO on the New York Stock Exchange since 2017 from a non-bank. So yeah, so that's kind of been my mortgage journey, and I manage about 5 people at the office today. I like it, and we're nationwide financing, so we do business from all walks of life. I have the good fortune to do from somebody buying a house for $60,000,
Mhm.
somebody buying one for $3 million. So
Wow.
that's the part about it where I enjoy is that you get all walks of life for people. So yeah,
Yes.
yeah. So
Yes.
and it will never get old for someone to buy their first home and to see them at the closing table crying.
Oh,
They may be a first generation. I had a young lady, first generation homeowner, and she is bawling at the table because um, it was a big deal in her family.
oh,
So
yeah.
yeah, yeah. So
That's amazing, and I know you get emotional, helping these clients with, first generation,
yeah,
first
yes,
homes,
yeah,
even,
yes,
having a second home. Yeah.
yes, and a couple came to me that they had saved up for 4 years to buy their vacation home to where they want to take their kids at the beach,
Wow.
and um, and they built a new place. Took them a year to build a whole lot, but that was a big deal. Now they celebrate there on an annual basis. This is a wonderful thing. So, and of course, with the advent of Airbnb, that they probably today with their second home, they spend 20% of their time there, and the other 80% they rent it out. And
Wow.
so yeah, so
Hey.
it's really cool to help folks. Um, and if I can say this, Brittany's right. Homeownership is the for Americans, right? Homeownership is probably the biggest wealth generator
Yes.
that you're right. For African Americans, it is probably the single largest wealth generator. That is
Yes.
how wealth is created. I have seen folks buy a home and then take the equity in home and buy a Subway franchise.
Yep.
I
Mhm.
have seen them use the equity in home to buy a Ford dealership.
Yes.
So it has leveraged itself in ways, but that's what it will do for us. And that's I'm a big advocate of folks taking advantage of it and sacrificing to become a homeowner. So
Yes.
yeah,
Yes, totally agree. I 100% agree with you on that, and I
yes,
think
yes,
the number 1 is, life insurance. If I'm not
yes,
mistaken, life
yeah,
insurance number 1, and then,
yeah, yeah.
yes, home ownership is the next one. Listen, those are the 2 biggest things that I totally agree with you on.
Absolutely, it
And
is. Yes, yes.
we must continue to conversate about what's important in our community.
And educate as well about the importance of it. And I have 4 children,
Mhm.
and 2 of them are homeowners and 2 of them are working on it now.
Yeah,
But to stress the importance of
yeah,
my latest is my oldest son bought his first house last year in Atlanta. And it was about a 4 year process of him having to save the money and me having to kind of encourage him and tell him what he needed to do. You're going to have to buckle down. The money just not going to
oh,
come out
yeah.
of the sky. You actually have to change your mindset
Yeah,
about doing investing money in another way. And so he
exactly.
did it, and now he is enjoying the benefits of him owning his own home, and he didn't have to worry about somebody in the apartment building telling him that the music too loud and
Yeah,
that you can't Airbnb it. You're right. He had both of those instances happen to him, and now he's enjoying the benefits and he appreciates it all the more. So
oh, yeah, and
yeah,
that is amazing,
yeah,
and
yeah.
I'm pretty sure he's loving the equity in the house,
Yes, yeah, he walked in the home with equity, right? So
yes.
yeah, he is winning here. Yes,
Oh,
absolutely.
yes, oh, yes, that's financial security right there.
Yeah, yeah. And Brittany, I know we're going to talk about this, right? But so people ask the question, when is the best time to buy a home? And more importantly, they'll say, interest rate. I took an application for a young lady today. She's 30 years old,
Mm,
and she is like, "Oh, rates are high and whole nine yards." And I says, "Let me help you with something. I sold 18% interest rate in 1988, and people are still buying homes. They
wow.
bought they bought a ton of homes, and so my point being is that don't listen to the rhetoric about rates are high. Rates are all relative, but more importantly, people that bought homes from 2020 during COVID
Mhm.
till today have probably a 25-30% equity appreciation in their homes.
Wow,
That's
that's
yeah,
amazing.
that's I'm seeing it today that someone paid 200 for a house in 2020 is now worth 330.
Mm, that's a lot of equity.
There's a lot of equity. And now you're able to do other stuff with it and grow and move to the next level. So I'm saying
Exactly.
today that even if you think the rate is high, the appreciation is still taking place. So you
Yeah,
want to take advantage of that. And I said, buy the house you can afford today. Um,
yes,
no matter what you think it is today. Now, especially if you're a first time homeowner, And I'll use my daughter as an example, my firstborn child. She says, "Ooh, Dad, I want a house like what you got. I want." I said, "Do you know what I had to do to get this house?"
Right.
Yeah, yeah, I'm not saying it's not impossible. I'm just saying as to
Yeah.
you want to live here, but your money won't. You can't buy a house like this right now.
Yeah.
What you need to buy is where your money will buy, and
Exactly.
and then knowing it ain't the end of the world. This is your first home,
Yeah.
and it'll become the other house later on. And so
That's
I'm
true.
doing a lot of clients that are doing move ups that bought a
Mm.
house
Yep.
uh, 5 years ago. Now the kids have got bigger. They're leaving elementary school, going to middle school. They want to be in a better school district, and they have the equity to take them to the new house. So
Yeah.
even if the house is $700,000 for the sake of conversation, but they've got 200,000 equity from the old house, they'll be
Oh,
just fine. Yeah, yeah,
exactly.
yeah,
Yeah, you just touched on one of my points of, what I would like to do when my kids go towards the middle school. I wanna go in a better district, so
yes, yes,
I'll
yes.
be reaching out.
Yeah, yeah, absolutely. And that is the thing. Seriously, my daughter is kind of eyeing the same idea now. She bought a house, and now my granddaughter, who's in the fifth grade, is going to middle school, and she wants to
Yeah,
put them in a different school district. And so now she has to move into another city, and so she's got the equity to be able to buy another house. So maybe
yeah,
something might happen for her over the summer. So yes, yeah, but that is
yeah,
typically. And this is why we say the springtime becomes the home buy or the home buying season, right?
yes,
So April through August, because folks are trying to put their kids in different school districts. So
oh,
there's a
yeah,
lot of moving around. And then there's the couple's got a 1 year old that they want to be in the district where you are. They want to buy that starter home. And
yeah.
so there's a lot of moving around that takes place. So
Oh, yeah.
yeah,
Oh, yeah, definitely. So I know you said you get emotional when you help people, whether they're first-time home buyers or buying their vacation home.
yeah.
So what truly inspired you to help people with home ownership other than the money?
Right. Yeah, yeah, seriously. But Brittany, I generally want people to win. And
Yes.
I also see it. I see what home ownership can do for your life. And so as a result, if you come to me and you genuinely want to do it, and let me back up and say this, I had the good fortune at my local church that, if you're familiar with it, Dave Ramsey has
Yes.
a course called Financial Peace.
Mm,
So my church asked me to teach some of the classes during COVID via Zoom because people are at home. And so I did it for about 2 years, and it's a 9 week course. But here's my point for me bringing it up is that we met weekly, but it was so interesting and insightful to teach people about changing their mind around
yes.
finance and wealth and saving and money. So it is your relationship with money, right? And so that has a history with it. It depends on what my parents taught me, and et cetera, et cetera. I talked to a friend. She says, um, I got my viewpoints of money from my parents. So, and it may or may not have been a good one, right? That
Right.
folks like, don't worry about it, just spend it. Don't save any money. Just spend the money. All right. I tell folks it's like selling $1 bills for 99 cents.
Mm,
How long can you do it? Not for
right.
very long, right? So
Mhm.
my inspiration comes from seeing people succeed and win. Um, to see my friend buy his first home with him and his wife, and then a couple years later do a move up, and he made $100,000 in equity appreciation that
Mm.
is able to buy another home. And
Ooh,
or I have the friend that bought a rental property that took the money and was able to buy a rental property and
wow.
move up to the next stage as well. So that those are my things is to see people succeed and really, really do well. So
Oh, yeah.
and it never gets old. It never gets old. I bought my first home. I was 22 years old and didn't know what I was doing. But I bought it because I had a wife and a 1 year old. I
Mm.
needed a home. And so that was my motivation. I got to put these folks somewhere. And so as a result, I talked my way into I never get it. The man, Mr. McAllister, was a home builder, African American gentleman in Los Angeles. And I didn't have all the money. He sold me that house on a lease option. I talked him into it, basically. And he gave me a year to come up with the down payment and to buy that house. And it worked out fine in that regard. So I bought my
Wow.
first house at 22 years old. Yeah.
Wow, that is amazing. Look at you. You have a way with words.
Yeah, I used him. I told him, and he probably knew I did not have the money, right? And I was like, I can do it. I'll figure it out. I will.
Yeah.
And over the course of the year, we figured it out. I hustled and worked hard and came up with that money and bought that house. So yeah.
Wow.
So
So
that's my motivation today. Yeah.
wow. So what are the biggest misconceptions people have about getting a mortgage?
Um, one, I can't afford it. It's too high, and I think a lot of that comes from just ignorance.
Mm,
uh, People are uninformed. You don't know. Or the biggest misconception is, um, well, my parents didn't own a home, so I can't own one, right? They're
mm,
looking at those negative aspects of something that transpired. And, or I heard that a family member got a house and lost, I had to put them out, the whole 9 yards. But you don't know all of the details of the inner workings of why that happened. And so, uh,
right.
what happened to them may not necessarily happen to you. But more importantly, it's too much work. My utilities will go up 5 times, or all, which you may be where you are today in the same way.
Yep.
When there is some responsibility that you will have to have with homeownership. Now, you're going to have to be responsible, and you're going to have to uh, take care of it like anything else. So,
Yeah, that's true.
yeah.
Just
And just a lot
just
of folks think I can't buy it today. I don't have enough money, and be surprised you might have enough money to buy it,
listen.
but don't know that. So I take the slow process of just explaining and breaking it down.
Oh
So
yeah.
I'll share this with you. There's three things that has been happening with the mortgages for the past 60, 70 years. They haven't changed: credit, income, and down payment.
Oh yeah.
Those three things. And today, there are all kinds of down payment assistance programs that help you answer that piece of it. And if you've been on a job for 6 months, I do you one better. If you are in the medical field,
Mm,
and or if you, I have done loans for folks that have graduated from college. So right now, this is college and high school graduation season, right? So
yes.
if they got their diploma on Friday and they got a full time job on Monday, they can qualify to buy a house. Why?
Wow.
Because the 4 years of college history is their work experience.
Oh yeah. Oh yeah. That's
So
true.
yeah, yeah. People say, and then too, I had one young man that he graduated college 6 months later, buying a home. His grandparents gave him the down payment. All the money he got for gifts when he graduated school,
Oh
his
yeah.
grandparents and everybody gave him the down payment. That money was used to buy the place. And wait, he was staying in a place, had a roommate. He took his roommate with him to the new house.
Oh wow.
So he said he wasn't paying the full mortgage payment.
No,
He was like,
exactly.
yeah, the guy went with him, and he put him in a one one bedroom, and then
Oh,
boy paid rent. He
that's
said,
smart.
yeah,
That's
it was
smart.
very, very smart. Yeah, and he
Listen,
saved every dollar of that down payment money that the people gave him as gifts, and
exactly.
he had the good sense to buy a home with it. He had
Oh
gotten a full
yeah.
time job, and he said, so we said you need to have some money or down payment. Where's it coming from? It was gift funds, and he could prove it. His grandmother wrote him a check for $5,000. Uncle and aunts and everybody gave money, and he had sufficient amount for down payment. Impressive.
Yes. Yes,
Yeah.
it is. Yes, it is. Let me tell you, Stanley. My I always tell people my story because I'm like, it's a testimony if you ask
Yes.
me.
Yes, it is. Yeah.
I was making $12 an hour.
Come on. Come on.
$12 an
Come on.
hour
Yeah.
with
Yeah.
a child. I wasn't married yet, but
Wow. 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 Wow.
yeah, and
Mhm.
I was able to get my first home. Like, I
Wow.
was, like, shocked about that. I'm like,
Yes.
"Wait a minute."
Yes.
I'm
Yes.
thinking you have to make buku money
Yeah.
to
Yeah. Yeah.
actually purchase a home.
Yeah. No, no, you don't. And you'd be surprised. You see,
Yes.
it is the fear of the unknown that people
Yeah.
say that, well, or they may have heard that their friend tried to buy a house and couldn't buy one, but
Yes.
you don't know the details of their story. And so as a result of it, uh, you just give up on the idea. But yeah,
Oh, yeah.
so
Oh,
congratulations. Yeah, that worked out very good. Very, very
yes.
good. Yes.
Yes, and so, I think what you said exactly what you said, so many people around me were either getting denied or not really going into the home ownership field
Yeah.
because, I was young. I wasn't,
Yeah. Sure.
but I was listen, I was so happy about it. And, that kind of brings me to, another thing. A lot of people think home ownership only benefits younger people. Can you explain how programs like reverse mortgages help
Mhm.
senior homeowners?
Oh, absolutely, yes. So, all right, let's say you bought a home and 62 years old is a starting point for reverse mortgages. And think of it as the idea is that reverse mortgage means that you make a payment going forward.
Yeah.
Reverse mortgage, they make a payment to you. They
Oh,
take the equity out and it gives you. So a lot of seniors are using reverse mortgages to supplement their pension, Social Security income, to maintain the mortgage and other stuff in that regard. And so there's a formula, and we do them at North Point. I don't. I refer them over to a colleague of mine, but
yeah.
um, you can use that equity to give you $1,000 a month, to give you depending on where it is, $2,000 a month, and that money will run indefinitely for 10, 15 years or so. Now, obviously, now the caveat is that when that person passes on, though that money has to now be given back, right?
Yes.
That loan that was given, and so, uh, but yeah, reverse mortgages benefit folks in all aspects of life in that
Yeah.
regard. So
Oh
yes,
yeah. Oh
um, yeah, so it's a wonderful product, and it is probably I want to say might be mm, 15 years old. I think reverse
yeah.
mortgage came on the scene about 15 years ago. Yeah,
Wow.
yeah.
Wow. That is
Institute,
amazing.
primary residence type of thing, and then of course, credit in that sense. But then that way, there's a calculation that they come up with. So yes,
Yeah, that is amazing. So it's not only just your home equity line of credit, HELOC, and
yes,
things like that. There's
yes.
actually reverse mortgages. I love
Reverse
that.
mortgages, um, what I like about where I am is that we do a myriad of products and services to help consumers. And so when I owned Wade Financial Services, my logo or slogan was, "We provide mortgages for your life." The emphasis
Wow.
on your, because
Yeah.
your life might be as different as the nose is on your face from somebody else, right? So
Right.
I'm looking to personalize the loan situation for your scenario. And so, yeah.
Yes.
Yeah.
Yes.
That's
I
still
love
my motto today is that we do mortgages for your life. Yeah.
Okay. So we do have a question from one of our viewers. When would you advise someone to consider that type of loan?
If we're talking about reverse mortgages, I would say
Yeah.
when they're 62 years old, and if they are finding themselves a challenge to meet their monthly obligations, and they've been in a home, they have equity in it, then they may be a great candidate to consider a reverse mortgage. Right? There's some other. There's actually a home buying counseling class that folks reverse mortgages have to take as well
Yeah.
to make sure that it's suitable for them. So yeah, because it's
Yeah.
not for everybody. Yeah.
Yeah, true, true. And you said it is for your life.
Yeah, yeah, for your life.
Personalized.
So yeah, so when would a reverse mortgage be a good idea? It'd be is that if you looked at your life today and says, "I've got this home, it's worth 700,000, I owe 100 grand on it. My pension and Social Security is on like $2,000 a month, but my
Yeah.
living expenses are four." Then you might be a great candidate to get some additional income to support that lifestyle and your life and meet your monthly obligations in that sense.
Yes,
So, yeah,
yes.
yeah.
So when you are considering equity in your home, which is more beneficial? Is it a home equity line of credit or a second home mortgage?
Great question, right? So, a home equity loan means that you're taking the equity out of home, and traditionally there is already a first mortgage in place, so you're getting another loan. So, a home equity line is similar to a credit card, where it's a limit $100,000, and you have 10 years. Traditionally, it's going to be 10 years open for you to
Mhm.
be able to go in and out and use those funds over the next 10-year period. At the end of the 10 years, whatever the outstanding balance is, then it becomes a fixed rate loan. So let's say it says a 30-year loan, right? So the home equity line is over 10 years, going into the 11th, excuse me, 11th year, it
Mhm.
become a 20-year fixed rate loan, whatever the balance is, then you can't access it anymore. So that's a
Oh,
home equity line. A home equity loan is someone says, "Hey, I want a second mortgage. These are the term. This is the rate. The rate's fixed, and
yeah.
they don't want to access." I do about maybe 20% home equity loans and 80% home equity lines that I'll do, because the rate is higher on a line of credit,
Mhm.
and you're only paying interest only. On a fixed rate loan, the rate might be lower because it's a one time loan and they gave you the funds right there. So people might do it. uh, I have a client right now call me and says, "Hey, listen, I want to just do a uh, basically I want to put a pool in, and I
Mm,
just want the money. I got to pay the guy, and I don't want to do. I don't want a line of credit."
right.
And then there's somebody else says that, "Hey, I'm going to do some improvements over the next year, and I would be able to pay the contractor as I need it, and or I'm going to use the home equity line to pay for student loans for my kid going to college." Or we there's a big wedding I'm planning for my son, and we're going to use the funds to pay for this wedding. A line of credit is going to be paid back over time. So
Mm,
those are the differences between a home equity loan. It's going to be a fixed rate loan, 10, 15, 20-year term, 30-year term it could be, and the rate might be X. And that's it. No prepayment penalty. And then a line of credit would be that it's like a credit card. You make
yeah,
a minimum interest only payment, and you can pay more. Nope, but it stays open. The limit is $10,000. You spend three, you got seven. You pay the three off, you got the 10 again to use. So it
right.
depends on the purpose that somebody's looking to do that.
Okay, awesome, awesome. So, getting back to being
Mhm.
a first-time homeowner, how
Yes.
should someone prepare financially before applying for a mortgage?
Oh, make sure that your credit, right? So there's tons of blogs and sites out there tell you the minimum credit scores you need. So I'm going to tell you today, my advice is that you should be, and there are three credit agencies, and they will gladly give you a copy of your credit report for free once a year. Experian, TransUnion, and Equifax. They all will give you a copy of your credit report for free. Uh, Pull it, see where you are,
Right.
right? You want to, I'm looking for a 680 credit score or higher, and we're going to average it over those three. So let's say TransUnion is 700, Experian is 680, and Equifax is 702. Then you're going to take the middle of the three, the 700 becomes the average score that we
Oh,
will use to price your rate out and qualify you for the loan. So that's first thing I do is credit, and then income. See what your income earnings are. And the rule of thumb is, and we've kind of gotten a little 40%. What we qualify consumers on 40% of their gross monthly income.
mm,
Now, lots of folks will say, I only want what is my net take home. I
yeah.
don't want my payment to be more than 40% of my net take home. So whatever that number is in your that you have in that regard. So that's what you want to figure out. If you're renting for $2,000 a month and you're comfortable with it, then you says, I want my mortgage payment to be 2 grand or less. And
Okay.
then my next question would be, is that okay? Um, they said, I've got a 720 credit score and uh, loan application I took today. Uh, and she says, yeah, credit's good. I've been on my job for at least 2 years. Great, excellent. Um, but I don't have any money to put down. I said,
Mm,
okay, all right. Not the end of the world. But
right.
now what we're going to do is, okay, we're going to say that FHA is going to require a minimum of 3.5% as a down payment.
Mhm.
So conventional can be anywhere from 3, 5, and higher. So I says, all right, based on that, let's back into it. You whatever the payment that you want to be at, then this is here's what it gets funny at, right? They'll say, I want a house, and the house is say 400,000, but
Mhm.
they want a payment that house is 200,000. So I
Mm.
said, we can't buy a house.
Nope.
We got to come down.
Yeah.
So they're like, but there's nothing out here for 200,000. Yes, it is. There's
Yeah.
tons of homes for 200. Still today in the Charlotte marketplace, you can buy a house for $250,000.
Yeah.
Now the issue or challenge is how you looking at it. And so
Mhm.
I'm like, is this your dream home? No. And I'm trying to imply that, you know, I'm just saying you have to. There is the idea that you have to live within your means.
Yes, be realistic.
Be realistic. And so that's what I'm sharing. I'm answering those three questions: one, credit score, income, and then how much of a down payment do you have today? And she says, okay. Uh, Young man says, I've saved up $25,000. I said, way to go. That's fantastic. He said,
Yeah.
but I don't want to spend it all. I said, okay. So therefore, then if you don't want to spend it all today, at 5% down at 300,000, that's 15,000.
Mhm.
So we're going to put 15,000 down, and maybe your realtor can have the seller pay some closing costs. Tell
Mm.
me your comfort level with that.
Mm.
Yeah, we're comfortable with that. So okay, great. So then now we know we're going to work with 300,000. Now, if the student loans and all the other debt, and we can make it work, where we're 40% of total debts, then we're off to the races.
Yes.
Yeah,
Yes.
that's kind of the
Wow.
method to the madness. Yeah.
I love that you can work with some numbers and try to make things work and
Yes,
put
yes,
things in perspective.
yes, yes, absolutely. And I tell folks, I said, no, not the end of the world. And so FHA is designed for bars. We do them from 600 FICO score to 660 is the range, right? There are some other folks that can do FHA loans at 580 credit score. I can't.
Mhm.
Our minimum is 600 is a score. So if someone comes to me and I say, you're going to get better terms at 680 score, but they say all I got is a 600 score, not the end of the world. We can still help you and
Yeah.
relatively competitive interest rates. So,
Yeah.
yeah.
Awesome. See, that's the thing. But having to decide between a FHA and a conventional loan. Can you first of all tell me, say out what FHA stands for?
The Federal Housing Authority, Federal Home Loan Housing Authority is what FHA stands for,
Yeah.
administration. And so the FHA and then Fannie Mae and Freddie Mac fits under conventional. They're quasi government agencies. And then you have the VA, the Veterans Administration as well. So those, then you have USDA, stands for U.S. Housing of Urban Development. So everybody has a different category, but FHA was developed. And the idea is that banks can go to FHA and they're going to guarantee the loan. They're not loaning the money, but they're going to guarantee it that should the consumer default on it, that they are going to cover it. So backed by the U.S. government. So that's FHA. And again, people that the barrier to home ownership is lower there, where you only need a minimum of 3.5% down. There are caveats to it, right? Because
Mhm.
with FHA, they charge an upfront mortgage insurance premium. Let me back and see about mortgage insurance. Mortgage insurance is required when you don't put down 20%.
Mhm.
So on any, whether conventional or otherwise, if you
Yeah.
put 20% down, you don't need mortgage insurance.
Mhm.
And so banks have come up with that as a threshold that says that the likelihood of default is lesser at 80% than it is at greater. So at anything over 80%, mortgage insurance is pretty much like automobile insurance.
Mhm.
The idea is that to ensure that if you get into a car accident, our collateral is covered.
Yeah.
If you default on this mortgage, that 3.5% to 100% in that regard, we can get our money back.
Yes.
So that's how it works and how it's calculated. But the difference between FHA and conventional, FHA says we're going to charge you an upfront fee. Kind of calculate it for us here. So let's say for 300,000, at $300,000, uh, and you put down 3.5%. So that's excuse me. So loan amount is going to be 289.5.
Mhm.
They say that there's an upfront fee of 1.75% that you have to pay. That's what the federal government charges, not us. That fee is they pay you charge it. It is $5,066. So you make
Mm.
them pay an upfront fee, and then you have to pay a monthly premium of 0.55 of the total loan amount. So
Yes.
the 289.5 plus the $5,000, then they say 0.55%. That is your monthly payment of mortgage insurance premium. And
Mhm.
the difference between FHA and conventional, that mortgage insurance premium, FHA, it never goes away.
Mm.
So traditionally on conventional financing, after 3 years, if you're paying mortgage insurance, it drops off.
Yes.
FHA, it does not. So
Yes.
those are one of the differences. Yes, it's a lower down payment, but the other side is until you refinance it or sell that home, that mortgage insurance premium, you got to keep
Mhm.
paying. Yeah,
And
yeah, yeah,
yes, and that's what I had to learn,
yeah.
when I was going to refinance. I had a FHA. I
Sure.
didn't have the full 3.5% to put down.
Mhm.
Luckily, I was approved for first-time home buyers
Yeah,
program to help
yeah.
with that
Yes,
and
yes.
things like that. But when I did refinance to a conventional loan, which took
Uh-huh.
off that mortgage insurance. I was
Yes,
like,
yes,
"Yes, I like
yes, yes.
this."
Yeah, yes. You paid your dues. Yeah, right, right.
Yes.
Yeah, yeah, yeah. And the equity, I don't know how long it took, but the equity position allowed you to do that. That
Yes,
was the benefits of
yes,
homeownership. Yes.
very much
Yeah.
so, and the increased credit score, you know?
And wait, so good point. Home ownership and your monthly payments on time increase your credit score.
Yes,
So it just made it
yes,
so it has all these wonderful benefits of home ownership, equity, better credit rating, all those
yes,
wonderful things. So absolutely.
yes.
Yes, yes, yes.
Totally agree with you on that. And I'm
Yeah.
like, "Oh, I love this."
Oh yeah.
Now, can
We
you
could be
tell
gas. Yeah.
right. Can you
Mhm.
tell me the difference between a fixed rate versus a adjustable rate mortgage, and what should first-time buyers know?
Gotcha. Okay. So difference between fixed rate and adjustable rate. So a fixed rate meaning that it could be fixed for 10, 15, 20, or 30-year term. Traditionally, people are doing 30-year mortgages today,
Yeah.
meaning that if that rate is at 4%, it is that rate for the duration of the loan, and there is no prepayment penalty. You can pay it off at any given time, but your rate won't change. And this is a big thing today. Even if your loan is sold to another lender. So I
Mhm.
closed a loan a year ago, the rate's 4%. You get so new people, oh my God, the rate's going to go up. Nope, the rate remains the same. The new lender has to honor that deed and mortgage that was done. Now, that's on a fixed rate loan. On an adjustable rate loan, meaning that the rate could adjust over a period of time. We actually today, we're not doing very many adjustable rate loans because they're uh, in the secondary market. We don't have a home. In other words, banks and lenders are not buying adjustable rate loans; they're buying fixed rate loans.
Mhm.
So the terms are better. So just overall, how we buy rates and what we use as barometers, the 10-year treasury note, is what we say it's inverted. So arms
Mhm.
traditionally used to be better. No, not today. They're worse. So
Yeah.
an adjustable rate loan, meaning that you start off with a fixed rate, say 4%, and there's a 5-year arm, meaning
Mhm.
that it is amortized over 30 years, but the rate's fixed for 5 years. At the end of the 5-year term, it becomes a 1-year adjustable loan. That's an adjustable versus a fixed. So you can start by either getting a 5-year, a 7-year, or a 10-year arm, meaning that it will be fixed for those periods of time. And it has some margins and indexes tied to it, typically to the 1-year treasury bill, that in year 6, if it's a 5-year arm, in year 6, it's going to adjust based on 1% annually. And it'll say the index was this and this. And then it said this is the maximum that can go, and this is the lowest it can go going into the 6 year. And it might be what it currently is today. We don't
Yeah.
know what the market will do, but that's kind of have the parameters set up. But that's the difference between an adjustable rate loan and a fixed rate loan.
Awesome. So there's options out there, so you don't have to just
It
stick
is
to
absolutely.
just
Yeah.
one.
But yeah, yeah.
So what are some hidden costs of home ownership that buyers often overlook?
Um, in relationship to the loan, and then I'll say outside, right? So outside, the hidden costs, people got to pay for inspections. You have to pay for an appraisal. So an appraisal is when you're appraising the home. I'm buying it for 350 in the comparables in a say 1 mile radius of other 3 bedrooms, 2 bath homes at 1,800 square feet. They should be selling in the last 6 months for the same price I paid for the 350. So you got to pay for an appraisal fee. And that
Okay.
appraisal fee, I tell consumers all the time, that is paid to a third party vendor, the appraiser, not to the bank.
Mhm.
Now, whether you buy the home or not, somebody got to pay for the appraisal.
Yeah.
So that's a cost that you have to bear. Now, if you get the seller to pay some expenses for you, you'll get reimbursed for those. But that is a cost of finding out what it's worth, right?
Mhm.
But other traditional costs and fees are, it's depending on the rate, it might be what we call an origination or discount fee.
Mhm.
So for this rate today, it might be at zero cost, or it might say it's going to cost you 1% today to get 6% interest rate.
Mhm.
So to get this rate of 6%, the cost to buy it down to this will cost you 1%. So the people ask all the time, great question. If your loan amount is 300,000, what is 1%? $3,000.
Mhm.
So it would cost you 1% because people ask it all the time, and it's a great question. I
Yeah.
know it because I do it every day. But they don't. People, well, how much is a point, right? A point
Yeah.
is right. I said 1%. They were like, well, how much is 1%? No,
Yeah.
no, 1% is 1% of the loan amount, or three. If it's 300,000, it's
Mhm.
going to be $3,000. If it's 289 loan amount, it's going to be 2890. And they're
Yeah.
like, wow, that's a lot of money. It's because you want the rate of 6%,
Mhm.
or you could get 6.5 at zero, but then the
Mhm.
payment is different. So,
Yeah.
uh, so that cost you're going to have to pay for traditional. We say there are the lender's fixed costs.
Mhm.
Traditionally, it's going to be credit report, appraisal fee, and underwriting fee, underwriting and processing fee. Those are our fixed costs, and they don't change.
Mhm.
Third party costs, I tell folks, are what a title company is going to charge, what the attorney is going to charge for the settlement fee. Those things we don't control. And if whoever you selected to use, because you, as a consumer, you have a choice to use it, and you says, I want to use John Brown Law Firm. Okay, fine. Whatever their fees are, that's what their fees are. And
Yeah.
then he says, I'm going to buy in Mecklenburg County, the recording fee is $90. I'm going to buy in Cabarrus County. The recording fee is $89. Whatever it is,
Mm.
it's a third party because that's what they're charging to record that loan. So those are the different breakdown of costs, some of them. And then one of the things people don't, you got to buy homeowners insurance.
Yeah.
You got, unless you're paying cash for it, you
Mhm.
got to get insurance to insure your investment.
Yeah.
And that depend. And today, some insurance carriers are basing the cost to your credit,
Yeah.
which
Yeah.
yeah, I might have a personal opinion about that, but yeah, but they're charging it. So those are one of the costs. And but typical according to last thing is going to be we call it reserves or an
Mhm.
escrow account.
Mhm.
And people say, what is this fee you're charging me? Actually, it's not a charge, it's your money,
Yeah.
but we have to set it up to insure. So the way a loan works is simple interest loans. You
Mhm.
can pay it off at any time. So if your payment is due in June, you're making the payment in June to pay for the interest you used it in May,
Mhm. Mhm.
because it's every 30 days the meter starts and it says in 30 days at 4% interest rate, it's going to be X on the outstanding balance. You owe us that money because you used it for the 30 days. So when you make your payment, you're kind of making it in arrears. You're paying for the previous month. Property taxes are due, depending, let's say you December of every year. They'll say when you bought the house in January, the taxes in December are going to be $3,000.
Mhm.
We're going to collect 1/12 of the $3,000, and we're going to apply that, put that in your account once a month. So when December comes around, we got the $3,000 to pay it. We're not looking for you to get the money because you must say, oh, I don't have it right here. So
Yeah.
I'll put 20% down. You got to have an escrow account to ensure that he gets paid. Same
Yes.
thing for homeowners insurance policy as well. So yeah,
Yes. And yeah, one of the biggest things that I am hearing on social media when it comes to homeownership is purchasing a brand new home and the taxes that come after
yes,
and
yes,
and
yes,
increases their mortgage.
yes. So great point. So let me share this with you because we do a lot of new home builds as well. And I had a client that home builder buying a house 6 months in, they're buying the place, and we calculated the property taxes based on the purchase price should be X.
Mhm.
But then we contacted the attorney and he says, no, since this is a new build, you got to base it on the appraised value. And now it went from 2,700 to $4,000 a year.
Mhm.
And and the customer's like, what is going on? Unfortunately, we have no control over it.
Mhm.
That's what they charge. And so so new bills get hit with that. It might start off with a bill of, because it was land at first,
Right.
it might be $1,500. The next year it's gonna be $3,500. And
Yeah.
they're like, "What? My escrow account, my payment went up." Yes, it did.
Yeah.
Now, that's the education part, whereby the realtor and the builder should tell them, "Say, you guys, you need to prepare yourself. I'm telling you, because it's gonna change." So,
Yeah.
uh, I had that experience 2 years ago. I knew it when I bought a house. It was a new house. I factored in more for property taxes because I knew it was brand new, and this was going. I know it's gonna change.
Yeah.
No, just because it's brand new, they go by the land, it's on $1,100 a year. I said it's not 1,100. I'm telling you right now, it's not going to be that. So
Yeah.
yeah,
Mm. Yeah,
yeah,
that's the biggest one, and I'm like, Yeah, new bills, you
Yeah,
should always expect for your mortgage to increase due to the taxes.
absolutely. Trust me, it's gonna happen.
Yeah.
Yes, yes,
So we did have a question of what is
yes.
the average cost of a three-bedroom home right now? And I'm gonna assume this is in the Charlotte, Mecklenburg area.
Okay. Again, depending on where you buy it at, because the county has Mecklenburg County got 1 million people in it today, right? And they can run anywhere from Huntersville all the way to Mint Hill and Monroe. So, an average 3 bedroom house today. Let me say this here. I at one point the median price for Charlotte was like $400,000. That's where the
Mhm.
price points have jumped to. But of course, you have swings in that regard. So again, the question is a little loaded because we need a little more information about where you want to buy it at and square footage. Because there's some median price homes today that may be 3,000 square feet that you can buy for 250, but
Yeah.
it might be more closer to rural uh,
Mhm.
than in the city. So it all depends in that sense.
Okay.
Yeah,
Okay. That was a good question.
yeah.
Now, what are some red flags some buyers should look out for when choosing a lender?
Mm. Um, if the lender is not willing to give you a pre-approval and or a loan estimate in writing, and he just says, "Oh, it's going to be about this," then
Mhm.
today, uh, you, I mean, someone just filled out an application as I'm doing this with you now. Someone
Mhm.
filled out an application on my website and it came over. I can give them an answer back in 15 minutes about
Mm.
pre-approval and give it to and stand behind it
Yeah.
and give them a loan estimate based on what they told me and what their credit was. I say, here is a good faith estimate as to what you can expect to pay for to purchase this home. So
Wow.
red flags if they're not willing to do it, and or if you go under contract with a lender and he said the rate is locked and he can't give you a lock agreement that says it's locked, don't trust it.
Wow.
Yeah, they should
That's
be able to. Yeah.
that's some good information. I didn't even think of that.
If I take your application and I says I'm going to lock your loan in today, when I give you the disclosures, it has a box, a disclosure through the
Mhm.
lending. It'll say, "Is the rate locked? Yes or no?" It should say yes, checked on the X in the box. Then that one, and it'll tell you how long the rate lock is good for and what the rate is. I locked it
Yeah.
for 30 days at 6.99% interest rate at a quarter point cost,
Mm.
and that's good for 30 days or whatever
Hey,
time period. Yeah.
that's amazing.
So
So
credit, right? Red flags. Make sure that it's a reputable place because you're giving over your secure information to them in that
yes.
regard. And that I would check references to make sure. On my website for me at North Point, it has tons of folks that have given reviews about what I do and how I do it in that regard. So yeah,
Amazing,
yeah.
amazing. So when homeowners are well, home buyers, first time home buyers are starting out, should they go to the realtor first, a mortgage lender,
Great
a
question.
bank, or what's the first step?
So Brittany, I would tell people to think of it the same way, and I know people do it every time. Think of it the same way when you go buy a car.
Mhm.
Do not go buy, don't go to the dealership until you've been pre-approved because they'll
Right.
sell you anything, right? Don't do that. So go get pre-qualified from a lender, and typically a customer will go find a realtor and says, "I want to buy a house." And
Mhm.
today, realtor's going to say, "Are you pre-approved?" And they'll
Yeah.
say, "What is that?" And we teasingly, the realtors I know, they're not going to put you in their car at $4 a gallon for gas and ride you around without you being approved. They're not doing it. So they
Right.
they want to say, "Go get pre-approved." When you get pre-approved, we go for a ride. We go see anything you want to see in that regard. But in the meantime, we just drive around sightseeing Charlotte, right? Uh,
Right.
so I would say first thing you want to do is if I want to buy a home is to go get pre-approved. Find me a lender. If the realtor I'm working with, I want to work has a list of realtors. Typically, I mean a mortgage. Typically they do. I'm
Yeah.
going to give you call this, and some realtor will text me and say, "Stanley, I gave your name one of three names to
Mhm.
this customer. They may call you." I'm okay with that. Then I have some realtors that I gave your name is the only name I gave. because of our relationship. We do a lot of business together. And
Yeah.
so I'll get a text message, and then a little while later, I either get a phone call or I will get a loan application that says, application just been started on the site by Brittany. Uh, and then I'll call Brittany and say, Brittany, thank you so much. If it doesn't say it, I said, by the way, who referred you? She says, a young lady by the name of Kina Black with the Blackman Group. I know her well, right? And so as a result, I then will follow up with the realtor, thank them for the referral, and help Brittany fill out the application, answer any questions. And I said, how soon are you looking to purchase? She said, we're looking at homes, or we want to look at some homes this weekend. It's a holiday weekend. There's a lot of
Yeah.
open houses. I said, give me 20 minutes and I'll have your pre-qualification over.
Wow.
Yeah. So
Amazing.
no, that's my that I would
Sounds
say.
easy.
Yeah, yeah. Well, it is a process, but if you follow the process, right,
Mhm.
you tend to get there a little bit better. So
Exactly. It definitely is a process. I can't tell you the
yeah,
struggles I had just filling out the or sending them
yes,
the paperwork they needed.
yeah, and so I will tell you, I tell folks all the time that I'm telling right now today, and Brittany, I say this facetiously, so I'm gonna give you a heads up. I said now, I said buying a home is, I said they say
Mhm.
buying a home is like having a baby.
Yeah.
I've never had one, but they say so. I says it's gonna be a little painful along the way, but when you
Yeah.
get in there, you're gonna forget all about it. In that
Mm.
regard.
Tell
And
me
so
about it.
uh, I tell folks, I says I'm gonna ask you for something, and my assistant's gonna ask you for it again.
Yeah.
I said, don't get frustrated. Just
Yeah.
follow the instructions. I says, I promise you, there is a method to the madness. And I said, so if you gave it once, and if I have it, I'll gladly give it. But they may say, I gave two paycheck stubs. I said, but they were 2 months old. We need them
Mhm.
30 days old. So you got to
Mhm.
give me two new ones. So
Yeah.
it's kind of like, so it's that process that it is. I agree to 100%. It is a process of gathering information. And I got a friend of mine who's very experienced and savvy. He says, hey, why do I have to fill out this IRS form?
Yeah.
I said, because you know how this works. And he's an experienced homeowner, right? I
Yeah.
said, we need to verify what you gave us is what you gave to the IRS.
Yeah.
I said, that's the method to the madness.
Yeah.
Because Brittany, there was a time people didn't give the truth.
Mm.
So
Interesting.
there's a term called a 4506T. It is an IRS form. Prior to 2005,
Mhm.
you weren't required to fill the form out. I tell people all the time, right? Think about this, right? The reason why they have a sign in front of a kid's school saying you can't drive more than 25 miles an hour,
Mhm.
because somebody drove more than 25 miles an hour and hit somebody, right?
Yeah. Yeah.
So the reason why these forms are created is because somebody did something they shouldn't have did. It caused a problem. And so now we need to have checks and balances.
Yes.
That that is a method to the madness. Yeah, yeah.
Gotta
So
have it. Gotta
y'all
have
have
it.
it. Yeah, I tell my man, I got it is what it is. I gotta turn it in. So everybody gotta have it. So but
Yes.
that's a process of the documentation. And sometimes, and I tell people all the time, the realtor says, okay, well, my house is gonna close in 20 days. If
Yeah.
your customer cooperates and has all the paperwork, it'll go just like you say.
Yeah.
But if they don't, if they can't find, man, I have a client. He said, man, I threw that thing away with my W-2. I threw that thing in trash, man. We're,
You
we're,
gotta
gonna,
get
we're,
it.
we're gonna need it, man. Yeah, yeah.
You
we're,
gotta get it.
we're gonna need that thing. Yeah, yeah. So, that is
So,
the matter. Yeah.
one of the things that I am looking into is purchasing land.
Okay.
And so that is something totally different. So I'm a first time
Yeah,
landowner
yeah, yeah.
soon, in the future. So tell me, how does one go about that, and what are the pros and cons of
Mhm. So one of the things that we do land financing,
that?
and right now today we're financing up to 60 acres that you can buy residential, right?
Mm.
And it can be some farmland, some agricultural that you're going to be doing some other stuff with, like growing avocados or stuff like that with it. A portion has to be designated for you to put a residence on.
Mhm.
But today, my clients that buy vacant land, they're buying it with a future intent. That I'm gonna build my dream home in the
Yeah.
mountains, whatever I'm gonna do with it. And so we today with vacant land, you got to put 35% down.
Okay.
It's a minimum down payment. It used to be 20%. But
Mm-mm.
based on how the economy has gone and things in that regard, and also too by us being a what we call a portfolio lender, and we
Mhm.
do um, uh, so much of vacant land, and we hold it on our books. So you just gotta have a limit to how much you can carry with it. And so as a
Mm.
result, we had to reduce it down. But my clients are buying vacant land, and he says I'm going to 6 months later or a year later, I'm going to get my plans, and I'm going to get a construction loan to build on it. So
Mm.
that's kind of how they're doing it in that sense of traditionally what we see. They haven't decided on the house yet or what they want to do, haven't got
Right.
the plans, and haven't picked out a builder. But the site that they like, they want to buy and acquire it now. Then they typically have how vacant land transaction take place.
Awesome. Yeah, because 'cause I'm looking to do a family compound. I wanna
Mm-hmm.
be, with my family all
Yeah,
together.
yeah, I love it. I love it. Yeah, yeah.
I see so many, people doing that, and I'm like,
Mhm.
"Wow, that's
We
that's
are.
amazing."
Yeah, I'm seeing that along with multi generational living. I have one client that it was her husband, her daughter, and son in law that
Mm.
they got a construction loan and built maybe about 6,000 square foot home. It had two suites. Uh,
Wow.
and it was generational living that they did. And they got a vacant. I was able to do the land and the build at the same time.
Oh,
So,
wow.
yeah, yeah.
Wow, I like that. See,
Mhm.
yeah, Imma have to talk to you about that
Yeah,
pretty
yeah, yeah,
soon.
absolutely. It's a great. So now today, if you're buying land, you got to put 35%. You're buying land by itself. But if you say, hey, I found this 2 acre lot that I want to buy, and I have a construction loan that I want to buy, we can package it together. I actually like doing that better. Then
Mhm.
you got to put 10% down.
Oh, wow, okay.
If you're buying and building at the same time, you don't need 35, you need 10. Yeah. So
Yeah, we
do it.
gotta do some talking after
Yeah,
this.
okay. For sure. For sure. For sure. Yeah.
I appreciate that information. Now, what is one piece of advice you give to anyone dreaming of owning a home?
Oh man. Um, Find out how much you can qualify, and don't let interest rates get in the way.
Mm,
Be intentional, save money, right?
yes.
I give one piece of advice. I recommend one book that I have read last summer that I find it to be phenomenal. The title of the book is called The Psychology of Money.
Mm,
Probably one of the best reads that I've read in some years. A great book on money management. They give like 20 principles about money management. But the reason why I mention it is because when you said about one of the pieces of advice is save some money.
yes.
People typically will find out a purpose, right? And I know when I bought my house, I says, all right, I'm going to need this as a down. This is why you want to get the knowledge of getting pre-qualified. I need this as a down payment for closing costs, for reserves,
Mm,
in case something happens in that regard, and any miscellaneous expenses are inside. Okay, this is the number. All right, how long will it take me to save this money, this number? And so if it's 12 months, then I know that I need to be saving X dollars a month. And that means I got to change what I do. Then maybe I won't be eating out as much.
yeah.
Uh, my best friend bought his home. I'm gonna say he bought a house. This house, I say 30 years ago, he bought it.
Mhm.
And so I asked him, I says, how did you buy this house? He said, I quit going out.
Oh, yeah, that'll
He,
work right
he
there.
said, I never get this. He said, my entertainment budget was $700 a month. I almost passed out. $700 a month? He said, man, that was my entertainment budget, 700
Yep.
bucks a month. And he
Yeah.
realized that if I want to buy a house, we got to stop doing that. So he
Yeah.
says, man, me and Netflix became the best of friends and Domino's. And so, but a year later, he bought a home. So,
Wow.
uh, but yes, so best advice I would give you is get pre-qualified, find out what your financial picture looks like. Some people don't want to see what their picture looks like because they're scared. Oh, I
Yeah.
did something. No, no, no. Knowledge is power, and you
Yes.
want to find out where you are so you can know where you want to go.
Right.
So, yeah,
Right. Right.
that's my
Yeah.
advice.
I
Find out.
love it.
Yeah.
Okay, I have 2 more questions, and I
Yes,
promise
yes.
you Imma let you go.
No worries. No worries. Yes,
So one of the questions was, if you are self-employed, how does that work when purchasing a home and, what are the benefits to that?
yeah, self-employed borrowers.
Mhm.
So self-employed borrowers traditionally is going to need 2 years of tax returns because that's how their income is sourced. Either you're in the form of an LLC, sole proprietor, S corporation. I deal with folks in all walks in that regard. But
Mhm.
think in the fact, and here's what my CPA told me when I owned my mortgage company. She said, Stanley, you're either going to pay taxes in the wash or the rents, but you're
Mhm.
going to pay them.
Yeah.
And so she helped me a great deal. She said, let's forecast. If you're looking to purchase something, you need to show more income. If you show more income, you got to pay more taxes.
Yeah.
And so, what do you want to do was the question, right? And so, I want to own an office building. Okay, then this is what we're going to need to show for you to be able to buy one. And so,
Mm.
uh, so for self-employed individuals, typically they're looking for you to have been in business for at least 2 years. Some places let you do 1 year, but I'm going to say it's a rule of thumb 2 years. So right now today, I'm working with clients and I'm doing them. They're self-employed. I'm looking for their 23 and 24 taxes. If they
Okay.
haven't done 24 taxes, I'm looking for the 23, 22, and
Mhm.
the 24 extension
Mm.
except till October. So if you don't have the 24, no problem. Just give me a copy of an extension, and then you
Right.
only need to use the 23 and 22. I'm going to average the income for those 2 years. If that income qualifies you, you're off to the races. You're fine.
Wow.
Now, speaking of self-employed borrowers, um, if you as a self-employed borrower don't have your tax returns and they're not you don't want to give them to me, you can still buy a house with as little as 10% down, but you're
Mhm.
looking for a higher credit score and they're going to use 12 months of bank statements to verify
Mm.
your income. They want to see the deposits coming in. If the deposits are coming in, they know that there's income being generated and we can use those deposits and we're going to take maybe 80% of those gross deposits and count as monthly income.
Wow.
And
Wow.
so you can
So
do it.
anything is possible.
It's, it is. I do about maybe 60% of myself. No, 80% of my self-employed borrowers, we use 12 months bank statements.
Oh, wow.
Now the rates are
Okay.
higher and they're okay with it.
Yeah.
But because they either haven't done their taxes or don't, or it's not enough income on the taxes qualify for what they one or two things has happened, and I'm okay with it. Hey, and but they have the credit, and they have the cash, and they have the reserves.
Wow. It's
So they
amazing
have
how
it.
they have options. I
Yeah,
love that. That is
absolutely.
amazing.
Yeah, yeah. So I
So
told them
everyone have options. You have
they
an
call
option,
all the
you
time.
have
Say,
an
hey, listen,
option.
you do 12 month bank statements. I do. I had a client bought a house for $1.2 million, put 20% down, 12 months bank statements. So
Wow.
I had great credit. We closed the loan. She had reserves, everything.
Hmm.
Mm-hmm.
I like that. That's
Yeah,
amazing.
yeah.
That is amazing. I love that. So now my last question is, how can people find you and
Oh,
how can they work with you, get in contact with you?
yes, yes, yes. They can work with me anytime. I love to. I am open 24/7. But my website is www.northpoint.com/Stanley-Wade. And you can find me there. There's a link on there that has all information about me as well as to be able to apply. My cell phone number is the best number, is 626 area code 234-3653. Again, 626-234-3653. That's my cell phone number. You call me, leave a message anytime. And then lastly, find me on social media on Instagram. My handle is the richest man on earth one.
Okay.
And I'll tell you what that means. Yeah, but it is the richest man on earth one. Is you can find Stanley Wade. You'll see me there, and then of course just Stanley Wade on Facebook. Yes, but the richestman.com came from about maybe 10, 15 years ago. Um, I just started saying it because of the rich relationships that I have in my life.
Mm.
So I became wealthy because of those relationships. And as a result, I have some friends that I've had for um, 42 years. I've had some friends from elementary school, and my life is richer as a result of those. I count my wealth based on relationships. And yeah, yeah. Thank you, Shannon. I appreciate that very much. uh, dear friend and client. Yes. So
Yeah.
yes, but It is based on the wonderful relationships, and I'm so thankful for them. And so as a result, that's where the thing came from, and it just stuck. And so people will see me on the street and they'll say the richest man on earth, and I said yes, absolutely. So
I love it. I love it. Rich in love, rich in help, rich
yes,
in knowledge, rich in
yes,
all. I
yes,
love
absolutely,
it.
absolutely, yes, yeah, yes.
It's amazing to speak with you today. I mean,
Thank you,
I am
baby.
truly honored to have a piece of your time of that 24/7.
Yeah, yeah, thank you. I appreciate that. Yeah,
Your knowledge has been tremendously helpful for the first time home buyers, for just anyone in general looking into home ownership as well as land ownership.
yeah,
So,
yes, yes, yes. I hope I've been of some value and provide some insight to your listeners. And thank you for the
yeah.
opportunity. I appreciate it so very much. Thank you.
Listen, I appreciate you, and with
Yeah.
that, I appreciate that. I will be calling you. So,
Yes.
a part of that 24/7, I will be
Okay. And I'll answer. Absolutely. You good. You're good with me. Yes. Yeah.
calling. Well, with that, I do appreciate you, Stanley, and I hope you have a wonderful evening.
Thank you. You as well. I do appreciate it. Thank you guys again. Thank you very
Thank
much.
you. Wow, that was truly amazing. Stanley talked about some amazing things from credit scores to closing costs. He reminded us that understanding mortgages isn't just about numbers. It's about empowerment, preparation, and the right partnership. Turning a dream into a deed takes more than desire. It takes clarity, patience, and a trusted guide. As you move forward, whether you're just starting to imagine a front porch or already house hunting, may this conversation be a compass. And remember, every step towards a home is also a step towards self determination. Thank you for joining us on a field of perspectives. Until next time, stay curious, stay grounded, and keep growing. I hope everyone have a great night. Happy Thursday. Every perspective is a seed, every story a horizon. Thank you for walking this field with us. If today's conversation sparks something within you, stay with us. There are many landscapes to explore. Subscribe, share, and keep the conversation growing. Until next time, keep your heart open to the fields ahead.